Imagine seeing something just take off, like a rocket launch, but right
Yeah.
there on the stock market. That's pretty much what happened with MongoDB, ticker MDB, just in the last couple of days. We're talking about a stock that absolutely soared, just a show-stopping performance, really.
So today, we're taking a deep dive into this incredible surge. We want to explore what fueled MongoDB's, dramatic rise and what that means for the broader market, for understanding tech trends, and importantly, for you.
Exactly. And for this, we've pulled together quite a bit. Our sources include excerpts from something we're calling MongoDB's earnings rocket, a deep dive. It aggregates news, the key metrics, technical analysis too. Plus, we've layered in analyst reports, market headlines, the works. We're basically here to distill all this information for you. Cut through the noise, right? Our mission today is to unpack the hard numbers, the analyst reactions, which were pretty strong, and the factors underneath it all. Both the bullish drivers, the reasons it flew so high, and also the crucial caution flags, things you need to watch out for. It's really about more than just the numbers. It's understanding the forces actually at play here. Okay, so let's dig into those numbers everyone's been buzzing about. Because MongoDB truly delivered, I mean really delivered. On August 27th, 2025, the stock just rocketed, plus 32.39% in a single day. But the show really started even earlier, didn't it? That 23% after-hours surge on August 26th, right after they announced they'd crushed their earnings expectations.
Oh, completely crushed them. And what's fascinating here, if you look closely, is just how much they outperformed. So for Q2 fiscal 26, MongoDB reported revenue of, get this, $591.4 million.
Wow.
Yeah, and that's up 24% year over year. Crucially, it beat the forecast by nearly $38 million, almost $40 million over expectation.
That's not small change.
It's not at all. And their Atlas cloud database service, that specifically outperformed expectations by a solid $20 million. Then there's earnings per share, EPS, came in at $1. The street was expecting, what, $1.57?
$1 versus 67 cents. Huge difference.
Exactly. These are not just, little incremental beats. They are substantial, really attention-grabbing numbers.
And when numbers like that hit, well, the market certainly takes notice. It reacts, sometimes strongly. The trading volume on the 27th was just jaw-dropping, 7.91 million shares.
Mm-hmm.
To put that in perspective for you, that's over 3 times its normal 3-month average volume, which is usually around 2 million shares, maybe 2.06 M.
Right. 3 times the average. That shows you people were scrambling.
Absolutely scrambling. It suggests a huge influx of investors reacting to that upside surprise, a rapid reevaluation happening right there.
And if we connect this to what the analysts were saying, well, they were quick. Very quick to update their outlooks. We saw multiple firms lifting their price targets almost immediately. Bernstein went to $338, Rosenblatt to $305, Cantor Fitzgerald $312.
Morgan Stanley, too.
Morgan Stanley, $325. Mizuho was a bit lower at $250, but still an upward revision. And even KeyBank, they kept their sector weight rating, but they still highlighted that strong 7% revenue beat, and they noted a 3-point acceleration for Atlas. That's significant.
So it wasn't just 1 or 2 cheerleaders. It was a pretty broad consensus building.
Definitely a collective reevaluation across the board. Reinforces the idea this wasn't just a blip.
So, okay, what does this all really mean for you, watching this unfold? The consensus price target for MDB shot up. On August 27th, it reached $301.36. Now consider this. That implied a potential 39.9% upside from where the stock was actually trading at that moment, around $284.69.
Almost 40% upside after it already jumped over 30%.
Exactly. That's a massive vote of confidence. But it does raise a question, right? Is that purely fundamentals, or is some of that just, market enthusiasm getting a little carried away?
That's the million-dollar question, isn't it? Separating the solid growth from the, let's say, market momentum. So beyond the raw numbers and the analyst upgrades, what's really driving this optimism? What's the story underneath?
Yeah. What's the core narrative here?
Well, the strong Atlas growth is, without a doubt, a key driver. That's their cloud database service, the engine of the business. Its robust demand shows they're not just getting customers, but keeping them, expanding usage. That's huge in the cloud world.
Stickiness, right?
Exactly.
Right.
Plus, their integration of AI, what they're calling Voyage AI, that's a big bullish theme. It positions them really well for future innovation, helps developers build AI-powered apps on their platform, capturing that AI wave.
And management seems confident, too. They upgraded guidance.
They did. Upgraded both revenue and EBIT margin guidance. That signals strong internal confidence about performance and, importantly, profitability down the line.
Okay, and profitability is key. What about their overall financial health?
Looks pretty good, actually. They're in a solid position. More cash than debt on the books. That gives them flexibility for R&D, maybe acquisitions, without taking on too much risk.
And the profit point.
Right. Analysts widely expect them to actually turn a profit this year. That's a major milestone for a company that's been so focused on growth. Moving from just growth to profitable growth. That often attracts a wider pool of investors, signals a maturing business model.
Okay, so a lot of positives, strong growth, AI angle, improving financials, analyst love.
It does.
There's always a but, isn't there? This is where it gets really interesting, maybe. We need to look at the other side. What are the potential headwinds, the caution flags? Time to hold your horses a bit.
Absolutely. You need that balance. And there are a few things investors should keep an eye on. First, there's a CFO transition happening. Now, that's not always bad, but any change in a key finance role can introduce some uncertainty. Markets like stability there.
Mm-hmm. Wait and see.
Sort of. Second, their reliance on Atlas. It's a huge strength, yes, but it's also concentration risk. If something hits Atlas demand or competition heats up significantly, it could disproportionately impact MongoDB's overall results. Too many eggs in one very successful basket, perhaps.
Okay, concentration risk. Makes sense. What else? Valuation.
That's the big one for many. The stock is trading at what analysts call premium revenue multiples. Basically, it's expensive relative to its sales. A lot of future growth is likely already priced in by the market.
And it could be more vulnerable if there's any disappointment.
Precisely. High expectations mean less room for error, any slip-up, and the market might react quite negatively. And then there are the technical signals. Momentum indicators are flashing pretty hot.
Overbought.
Deeply overbought. The RSI, Relative Strength Index, hit 86.4. Generally, anything over 70 suggests the stock might be overextended, possibly due for a breather or pullback.
Like an engine revving too high.
Good analogy. And volatility, measured by ATR, average true range, is also way up. That means bigger price swings are likely, both up and down. Could be a bumpy ride. Plus, some fundamental analyses still tag the stock with an overvalued fair value estimate, suggesting a possible gap between the current market price and maybe its intrinsic longer-term worth.
So you got this strong performance, strong outlook from the company, but technically stretched, high valuation, maybe fundamentally overvalued by some measures.
Exactly. Understanding both sides, the bullish case and these cautions, is absolutely crucial for you to really get the full picture here. Don't just see the rocket, understand the engineering too.
Understanding the engineering, I like that. And, this huge surge, it didn't just materialize out of thin air, did it? There were signals building up before the earnings announcement. Clues, maybe.
That's a great way to put it. There were definitely clues. For instance, back on August 18th, so over a week before earnings, Citi initiated a 90-day upside catalyst watch on MongoDB. That's a specific signal. They saw potential for positive news driving the stock.
The catalyst watch, okay.
Then just 2 days later, August 20th, Citizens JMP reiterated their market outperform rating. And they had a pretty punchy target, $345. They specifically noted strong revenue growth even then, like 19.24% year over year.
So these weren't secrets. Big firms were already flagging positive trends before the earnings beat.
Correct. These earlier votes of confidence, combined with that absolute blowout earnings report, really set the stage. It helps explain why the reaction was so dramatic. It was a building narrative.
What an incredible deep dive this has been. We've really unpacked quite a story here with MongoDB. We've seen a stock just propelled upwards by stellar earnings. Yes, strong analyst backing, and undeniable market momentum, a real surge. But just as importantly, we've also identified those crucial caution flags, the high valuation, the deeply overbought technical status, the elevated volatility, things you cannot ignore.
Right. And this really brings us to an important question for you, the listener, to think about. Given MongoDB's huge run-up and that overvalued label some analyses are putting on it, how do you actually differentiate? How do you tell the difference between sustainable growth, the kind driven by real fundamental strength, versus maybe speculative enthusiasm that's just fueled by this really strong recent news?
That's the key question.
It is. And thinking ahead, what specific data points or future performance indicators would you track closely? What would you need to see next quarter or the quarter after to really assess MongoDB's longer-term trajectory? To figure out if this rocket truly has staying power beyond the initial excitement?
Something important for everyone to consider. Thank you for joining us on this deep dive. Keep digging, keep questioning, and keep learning.